How's it going, guys? It's Ralphie from Beyond the Huddle. Welcome to this week's Bitcoin forecast. As always, we're going to take a look at the COT, Commitment of Traders report, to see what the asset managers have been up to this past week. Then we're going to go ahead and take a look at the margin accounts to see what the leverage traders have been doing on Bitcoin for the Bitfinex trades. And then we're going to go ahead and then take a look at the price action to see what Bitcoin could potentially do next based on our short-term and long-term levels. So let's get started. Okay, guys, so beginning with the COT here, as you can see, as of 09/21, so September 21st, we can see that the Bitcoin COT positions for the asset managers actually increased in longs by 17 contracts, and it actually went down, or I'm sorry, it also increased by 20 contracts for the shorts. So that's, to be expected after such a big drop. You're probably going to get some sort of retracement in prices, or at least that's what they might have been expecting. And that's why they might have added some contracts here. So today, because there's not really like any large rearrangement of the contracts this past week, what I would be thinking of is just how did those addition in 17 contracts for the longs and how did the addition in the 20 contracts in the shorts affect the average position and then the net position. So as you can see here, taking a look at the longs, we did rebound and go a little bit higher, but we're still below the average. So that tells me that the position, although we're still quite high in the longs, we're still not switching the trend, and the trend at the current moment is to keep declining in those positions. And the reason, for that was because as we get to these previous peaks, we sort of expected some sort of sell-off in the long, some sort of reduction, and also that was sort of like a swing high, swing low. That was a premium. So that, again, we keep expecting more reduction in those longs. When we take a look at the shorts, do the same idea. We are clearly staying strong above the average here in the shorts, and that is again the very reason why we never expected the market to trend in Bitcoin. Of course, it has nothing to do with altcoins. Right now at the moment we're just playing the field. If you want to buy, you're buying short term, and you're not holding for some swing trades. So as you can see here, the net position, even though we're still above the zero line, remember, if we want to confirm that this is in fact a bearish, longer term move, then we would like to go below the zero line, sort of the same way that we did back here in February. So February right here, boom, and then back in April. So April obviously was the high in the market, and then that's when the net position just absolutely died. And then the low in the market, funnily enough, that was the low in the net position, which kind of makes sense. Like I said, right, that they would start adding longs, reducing shorts, and then you turn that long finally all the way back here in July. And if you guys remember, back in August is when we turned bullish. So you technically could have started to be a bit more bull back in May 31st. You can see right here, because why? We finally went above the average. So that told you the minute you went above the average that you were likely going to try to challenge and go back above the net position. You can see here that when you and that's what we were. Again, we were starting to be a little shaky at the beginning of January because we went back below the average here. But it's not until the net position changes that you actually have to switch that bias. So again, currently we're net long, but because we're below the average, we're starting to think that we could challenge this. If we want to be starting to think that we're going to be, that long-term bull, we have to go back above this average right here in the net position. And of course, as I said, the last one right here was we wanted to see this. It's not enough that the longs went below the 60. We wanted to see the shorts go above the 60, and that's what would tell us that this is indeed, then the net position would have to push lower for that to happen, and then we're indeed going to see lower prices. Until that happens, then we're kind of just expecting, not to get too ahead in the video here, but then we're kind of just expecting a bounce right here for a discount. Right, so right into this zone, into this weekly demand. But yeah, we'll talk about that in a little bit. So now let's move on to the margin accounts on Bitfinex and sort of map out what we think could happen with those and how that could affect price. Okay, guys, so taking a look here at the margin accounts for Bitfinex, we can take a look at right here on the left-hand side. As always, we have the net position. That's the longs minus the shorts, kind of like what we do here on the COT. Then we have the longs, again, like we do in the COT. Then we have the shorts, and we're looking at a quarterly chart first. So essentially what we want to think about right now is how are these quarterly candles going to close? You can clearly see that the net position is going to let's maximize this. It's going to close at an all-time high. So you can see right here, we tried going up above the all-time high, failed. So now you're closing as a bearish candle. So obviously, if you're going to do that, what do we expect in quarter number 4, at least to start the quarter 4? That's when I would expect a move lower into some sort of a discount, into some sort of support. Obviously, it could just open and go straight up, of course. But that would support the idea of a move lower in prices when Q4 starts, which we're basically right there. I mean, literally September is about to end. We're about to start the fourth quarter. So, a lot of people are thinking that the fourth quarter is going to be bullish, and I think that we're going to start off with a lot of pain, very, very strong bearish moves lower. And then we're going to hopefully lessen those COT positions and then start to get some bullish price action. But you can see right here that not only is the net position not only is the CLT telling you bearishness, right, because the shorts are so high and we're reducing that position, but so are these margin accounts. And again, historically speaking, anytime you got to these really, really high, that is an unevenness. So you can't have too many people winning. And that's how this market, likes to work. So again, that's only if we can stay below the quarterly open. Same thing with the longs here. You can see it's almost a reflection of the same thing. And if you guys remember, I had this green zone as my target. We can look at it here on a weekly chart. That's the weekly demand. I wanted to see a move lower right into that. Now we know price doesn't travel in a straight line. So this real little retracement here starting in the end of August or middle of August is, gave some breathing room to the market. But as long as we stay below this quarterly open, I'm looking for these shorts to keep these longs to keep declining. And that's very important because for example, if we look back, for those of you that don't believe it, if we look back on February of 2020, let's see where that one is. You can see right here, huge increase in the short. So when was the high in the market? I think it was somewhere around the week of the 16th or the 24th. So right here, you see this huge reduction in shorts. Boom. I think that was the actual high in the market in Bitcoin. And then you can see a week after that, you would have been, you would have had this, you hit this demand right here. So that's funny, that works that way. You hit demand right here, and then the shorts would have been telling you, okay, there's a high probability that the shorts are going to go higher. The shorts then ended up moving, somewhere around 400%. That's an insane number. And then look what happened. That was that huge, move lower about, 60%. We all remember that, that COVID move. And you could have seen it coming right here from the shorts. And, just to put it a little further in context, let's go take a look at the net position and what that did. So you can see right here, the high was, there you go, February 17th. And look at this, the net position fell by 84%. Okay, so yet again right here, if we are potentially looking for the net position to keep declining as long as we stay below this quarterly open, I mean, we could, we don't have to die, right? The net position doesn't have to go, straight to hell. It could just stop at this discount, right? Now again, there's nothing saying that it has to hit it, but it would be pretty interesting if we do move lower to that level. And like I said, the quarterly candle does suggest that as long as we can stay below that open. So these are, you can see right here, we dipped into this, and that was the June move higher. And, it makes sense. So, yeah, you guys can back test this. Again, it's BTC USDT. I'm sorry, BTC USD shorts, right? And again, you can back test it on a weekly, daily, monthly, and see kind of how price flows. So let's take a look at what levels are we talking about. Well, if you guys remember, this purple zone was our discount. I kept it on just because I did have a feeling that it was just going to try to overshoot it, kind of like this here, and then come right back above it. So we want to see it clear the top of that discount. So that's a 61. But obviously that's just the fib level. The more important part that I'm interested in here is the yearly open and the quarterly open. So let's go ahead and go to the yearly. You can see we've been in a pretty overall bearish trend. So every time you see this big topside wicks, we're not able to sustain those shorts, which makes sense, right? The market has been moving higher overall, so you don't expect the shorts to have held. Every time they increase, you expect to be a buy the dip sitting. So what do you guys think is going to happen then? If this candle closes, it's really interesting because this quarterly candle is closing bearish, this quarterly candle is closing bearish, and so is this quarterly candle. However, when you're looking at the macro trend, look at the difference, right? And this thing keeps resizing on me, but look at the difference, right? You have the net positions at an all-time high. You have, well, rejecting the all-time high. You have the longs rejecting an all-time high, but you have the shorts coming from an all-time low. And clearly we can see this big wicks to the downside. So there's been some clear rejection there. So maybe what we could have is the beginning of the fourth quarter has what I've been talking about, which is a large move lower here, a large move lower in net position in the longs, and then you have a pretty decently sized move higher in the shorts, and then it keeps repeating the same cycle, which is what? We're going to keep having just topside wicks for the yearly candle on this one. So then we go to the monthly candle. Look at this right here. It's looking like a swing low, swing high discount. That's what we talked about earlier. And now, again, last but not least, what I want to see is a move above the yearly, a move above the quarterly. So there you have it, guys. If we can move above that yearly, then it's going to get pretty scary. And it's going to come up pretty hard. I would expect something like this. Again, this isn't priced, so it doesn't have to do it. But, you know, the market likes to work that way in weird fractal ways. So that would be my target. Maybe we would have a, you know, about a 200% rally in shorts. Last time, remember, during the March drop, it was a 400% rally in shorts. So, you know, maybe cut it in half, a 30% drop from current prices. That could happen. So let's move on to price and then see how, you know, everything gets put together. Okay, so welcome to everyone's favorite part of the video, and I must say this TA is looking pretty scary at the moment, and it's looking pretty accurate since what we have been saying all along this entire time, even before this low was being made. And once this move happened here, we were saying that, you know, the most we saw it coming was up to this premium. And that was just because the COT was telling us, hey, I am not willing to decrease those shorts. Had that happened, we happily would have been calling and expecting for this premium swing high to swing low to get broken. But as you can see, we stopped right at the equilibrium of this green candle, which that's a weekly supply. Like almost to the tick. If I go here to the daily chart, you can see it right there on September 6th. And this big, huge down move happened. And then that's when you have that awkward stage of, is it going to continue? Is it going to temporarily stop? What do we do? How do we handle it? Well, I do have my lines here. And remember, I'm going to keep this very, very simple. What we want to do is focus on our green zone and our purple zone. Remember, the purple is long term. We use those for the monthly. And the green is for the short term. That's the weekly. So those will change every week. The purples will change only every month. So you can see right here, as of last week, what we had was this green zone. And we said, as long as we stay below that short term level, we were bearish. Well, we hovered around it and then we crashed 18%. So now that it's a brand new week, we can go ahead and delete that. And now we can keep the one that we created for this week. And here it is. We actually just went below it today. So yesterday closed, yesterday closed below it. And then today we wicked above it, tried, you know, to fake you out like it always seems to do. And then now we're still working our way below it. So as long as we can stay below this green zone, guys, that's the most important part, right? So we're below the monthly open right now. We're below the weekly open. We're below the short-term level, right here, the green zone. We're below the long-term level. And remember, the month's about to close, so we're going to have a brand new monthly level coming soon. Now, that means that our target becomes 38K and then obviously the discount. So I'm almost willing to say let's get rid of 38K and let's just, you know, check out to see where the discount goes. Now, again, there's not much to talk about. This is literally as simple as I like to keep my TA. And when we put everything together, right, when we think about the way that these shorts are looking, all these net positions, so let's go back to this monthly, the quarterly. When we look at the potential for the new quarterly candle to start and then make our way lower on the longs, on the net position, and then potentially make our way higher, even if it's just the topside wick of this candle, right? The fact that it's going to move higher on these shorts will potentially be what causes us to fall down to this. Now, as we hit this level, guys, that's the important part. As we hit this discount, for me to expect this discount to get broken, because I could do swing low to swing high, discount buy, the key there is going to be, do we lessen the shorts, the net position, and go below the zero line, right? And then do the percentage shorts here in the yellow, do they go above the 60 line? Okay, that's what's going to stay important. And in order for that to happen, the longs have to decline and the shorts have to increase. Or the shorts could stay the same and then the longs would just fall out of bed. So if we see any of those two scenarios, then I expect prices to break this discount and move lower to this price action right here, okay? To somewhere around this level, between the 20K to 18K, and it's going to get very ugly, and a lot of people are going to get hurt. And we're not in this market, we're flat, we've been flat for a while, and you guys need to take care and be careful, because it could get very, very dangerous, especially with all this, China banning mining and trading and everything. They have a full-on attack, and everyone thinks it's going to be different this time. But from what I've read, from what I've seen, I think every single time China has banned Bitcoin, crypto, there you go. Every time China has banned crypto has been because of a different reason. And this is the first time that exchanges have gone as far as closing their businesses down and not keep trading. So, at least that I remember. If you guys think differently, or you have seen something differently, please feel free to drop it down in the comments so I can get informed and also have that knowledge. So yeah, it's not looking very good fundamentally. You also have the regulatory crackdown potentially from Gary Gensler and the SEC and the U.S. government. There's taxes coming on the way for crypto as well from the infrastructure bill that's being passed. So again, that could very well be what leads to those shorts increasing about 200%, and then having a big drop in price, and then hopefully then we can see the shorts on the COT drop. So with that being said, guys, this is my Bitcoin price analysis forecast. Again, not looking rosy here. It's looking very bearish. And hopefully we do see a move down to 36K, because then I can finally make a good decision. And depending if it crushes it, I would rather it crush it kind of like this candle right here, instead of just hanging around there. When it starts to hang around there, I start to make bad decisions, and by that I mean, I might take a stab at it here and there, and I don't want to have to deal with that. So either bounce off the zone nice and swiftly, or slice right through it nice and aggressively. So with that being said, guys, if you find some value in this, please share with your friends and family. Give us a thumbs up, subscribe to the channel, and I'll see you guys next week.